Investors and traders, welcome to the channel. Market chart pattern today is 15th of December 2024. Hope everyone is having a great weekend. We'll be taking a look at the key US financial stocks and ETFs in this video. So the KRE, XLF, JPMorgan, Goldman Sachs, Wells Fargo, all these stocks. And today's format is going to be a little bit different. We'll be taking a look at the technical analysis for sure, but today I also wanted to take a look at the total returns that we have seen for some of these stocks which they have returned to the investors. And as always, this video is for educational purposes only and it's not a financial advice. So let's start by taking a look at the stock of JP Morgan. What we see is the historical total return since October of 2022 when the bull run really started till the recent 13th of December 2024. So on the x-axis we have the dates. It's going into 2025 just because of the scale, but the data is still the 13th of December 2024. And on the y-axis is the total return, which includes if there were any dividends paid back to the investors. Those have been assumed to be reinvested. So this is how we calculate the total returns. And what we have seen is a fantastic performance by JP Morgan, a fantastic financial institution run by a superstar CEO, JB Diamond. And what we have seen is if the investor held it through all this period, they have been rewarded really handsomely. And we can see that the stock really begins to turn around November of 2023. That's when the Fed did its pivot and they began to actually talk about cutting interest rates and moving into 2024. And we see a number of financial assets in the financial services industry operating in that industry. Their stock actually began to take off from there. But even before that, the returns have been quite nice. Especially this is where the bear market of 2022 ended, and we began to see a nice recovery right here. Then moving on to Goldman Sachs, here fantastic performance as well, 120% return, a little over 120% since October of 2022, but the profile is very different compared to JP Morgan. Look, it went into a sideways period where we had nice gains, but then we also had this period where we just went sideways, and the price action, we were watching that really carefully. It was just sideways. And then this is the November 2023, around that time period, October, November, we begin to see a really nice move higher. This is when the most of the returns have come in. XLF, which is a broader ETF, and Goldman Sachs and JP Morgan are part of it, along with Berkshire Hathaway, Visa, MasterCard, American Express, which we'll be taking a look at a little bit later on, Bank of America and other stocks. So this one has returned about 80%, a little bit less than 80%. For the investors, this just shows that sometimes holding the individual names could actually yield better returns. But if you're looking to actually diversify, reduce the risk, just not by being into single stocks, then ETFs provide a fantastic way to do this in a quite a cheap manner, because these are passively managed funds. So there we go, not bad performance at all, pretty fantastic in fact. And then if we take a look at the Morgan Stanley, we can see the profile is quite similar to the Goldman Sachs. And then this is when the big move started to happen, when the Fed started talking about cutting interest rates moving to 2024. And there's a big move coming from November, which took it about 100% in terms of the returns. But fairly disappointing returns if you were in this period of time. So this is where one really key thing to take from these charts is actually timing matters, and timing matters a lot. Here we go. This is the Berkshire Hathaway. This is the company owned by the legendary investor Warren Buffett, and we can see that really nice profile for returning the returns to the investors. And here we have seen the big move starting in the first half of second half of 2023, way before the pivot announced by the Fed. And now it's just gone into this period here where the Warren Buffett quite public, it is actually selling a lot of his holdings and moving a lot of it into cash. That is, he sold about $180 billion worth of Apple stock, and we can see that the returns are beginning to fall as the price of the stock begins to fall as well. So the investor, the legendary investor, does know something. This is why he's moving a lot into cash, and maybe he's just waiting for a big opportunity to come where he begins his asset buying spree again. It might also have to do with the fact that he's reaching a certain age and then he might be preparing for handing the reins to someone else. I do not know exactly, but we'll be just watching the price action really carefully. And here we go. Visa is not really a bank. I don't believe they have the banking license, but you look at their returns profile, it is really good compared to traditional bank. Even Goldman Sachs, which is going sideways for quite a while, this one was returning fantastic returns. And look at, this is where the pivot began to happen. Fantastic. Went through a period of consolidation. I'm not really sure why this was happening, but in pattern recognition, we were watching this one really carefully. Return a little bit less than 80% for the investors. And then we have the Mastercard has actually overperformed Visa, a similar kind of profile, and they are of course in the similar kind of industry. And I believe together Mastercard and Visa in that industry holds about for the credit card processing about over 50% of the market share. We also have American Express in this market, but much smaller provider. And here what we see is it has performed better than Visa, returning about more than 80% for the investors, and it's also the stock price is higher than the Visa, which is just reflecting that the returns are higher. And Wells Fargo, here we go. Wells Fargo actually returned over 100%. That's quite amazing. Look at this profile right here, just going nowhere. And then it was just returning about 60-65%. And look at this move, which came in, a little before the October 2024, and we have seen really fantastic gains, especially coming in from after the week of election. Wells Fargo returning nice as well. American Express really fantastic, returning over 120% for the investors. As JP Morgan has been the highest one with 152%, and the American Express comes second around 120%. Look at its profile here, quite similar to Goldman Sachs, for example, but very different to Visa and Mastercard. And here we see this is where the Fed pivots happen, and look at this fantastic return coming. And then here we go. If we put all of these things together, we get a chart which is a very busy looking chart, but I've tried to simplify it a little bit in the next chart. So these are all the assets that we are tracking here. XLF, KRE, Goldman Sachs, JP Morgan. We can clearly see the winner is JP Morgan, which is this gray line around here, followed by this pink line, which is the American Express, followed by this light blue line, which is the Goldman Sachs. However, and the interesting thing is to watch the XLF, which is purple line, and you can see that this is lagging behind these top performers right here, but nonetheless returning really nice returns. And by getting into an ETF like that, one is actually diversifying or trying to reduce risk to the individual names. But however, sometimes taking that risk of actually being invested into the individual names is actually giving better performance, as well as we have seen with the American Express. We have seen this with Goldman Sachs and of course JP Morgan, but these need to be bulge bracket banks, because what we have also seen is an outlier here. This is this blue line right here, and what is this blue line? Basically this is KRE, which is the regional banking index, regional banking ETF, and we have seen it actually underperform at one point, even being in the negative territory. So when an investor is looking to take exposure to the financials, I think they really need to do their due diligence, what kind of instrument they want to use. They want to use ETF based on the risk profile, or they also want to be in their individual names. If the individual names, what kind of names to take a look at, then taking a look at a chart like this will actually help them make this kind of a decision, because what we have seen is that the big bulge bracket banks like Goldman Sachs, JP Morgan, they are clearly outperforming even the ETF XLF itself. And then if we just simplify things a little bit and we just focus on the XLF and some of its components right here, including the Berkshire Hathaway stock, which is part of XLF, we can see the clear winner is the American Express, and then we have Wells Fargo in here, which is a little bit surprising because most of these gains have come in a really short amount of time, but nonetheless it is there. But I would actually focus on American Express and Mastercard and Visa. Look at the Mastercard returning about 87% and Visa returning about 78% or 79% roughly. So a nice performance there. If investors were holding these stocks or the ETFs throughout this time period, they have been rewarded quite nicely. Now we'll begin to take a look at the technical picture of these stocks. So let's start by taking a look at KRE. In fact, so KRE. This is the Spider S&P Regional Banking ETF, and we were actually looking for our target around here, and this is where the target was met. This is the election week, and in fact it moved higher right to the 78.6% retracement, and now it's pulling back. It could pull back further right into this structure around $60. That's possible, but the good thing is our target has been met. It was our long-standing target. We had been, subscribers of the channel will know that we went through all of this consolidation for several weeks and months, always targeting this one, and I'm really happy to see the target being met. And now I don't have any further targets. Even the 78.6% has been met. So just watching the price action now. Now if we just move to the XLF, and what we see is this blue target it has been met. We have a further target around $53. The price came pretty close to that, so between that I believe I'm quite happy to say that our targets have been achieved. And now just watching the price action, it could also pull back a little bit further as well, maybe coming down to about $46-47. So consolidation sideways is down after having this kind of fantastic run remains a possibility. Now let's take a look at Goldman Sachs, some of the individual names, and here we go. Really fantastic stock. This is where it really began to accelerate from October of 2023, and we had our targets around 518, and it was exceeded right to the ABCD. Target has been met, and now it's just being consolidated. No further targets for now, and I'm just going to be watching for the price action. Really interesting chart for JP Morgan on the weekly chart. We had this target about $250. This is the CITI leg, which is 1.618 times the AB leg. It hit the exact level. Doesn't happen that often, but it does happen. This is the power of the patterns that we try to take a look at. And here what we have seen is for the past 3 weeks is just after reaching that exact level, it's just pulled back. Now this is the market symmetry concept. It could pull back a little bit further into the right about $230, maybe a little bit further as well to about 225, which is going to be the 20-week moving average. Now the key thing is that I don't have further targets for JP Morgan as of yet, so I'm watching the price action really carefully, but really happy that our target has been met. This is what we were watching for. This is the monthly chart for JP Morgan, where we have really big ABCDs completing right here, but the momentum for the stock is so strong that it actually went much higher, and this is what we captured on the weekly chart. Just because we are actually completing this big ABCD cycle right here, I am actually very watching very carefully the price action, and on the weekly chart don't have any further targets right now, and it looks like we might actually go into a period of consolidation with sideways to stock moving a little bit lower. Might be the case, but it has had fantastic run. Now let's take a look at the Citigroup. Right at the 78.6% retracement, it's we were watching this expanding triangle. Not a favorite stock of mine. If it continues above this $71, which is 78.6% retracement, maybe it goes for an all-time high for itself. But it hasn't done that since January of 2020. So pre-COVID days. Here we go. Yep. So JP Morgan, Goldman Sachs stocks, those are really performing much better than this one. So not a favorite stock of mine. Then let's take a look at Bank of America. There we go. So the Bank of America stock, here we go. It's one of our favorite stocks. I've done a video where I've explained long-term cycles which are operating in this stock. Really nice video from an educational perspective to have a look in our archives, and you'll be able to see that was done towards the beginning of 2024. So here it has met our target, which was this red box right here. Went a little bit above that. It's right in a zone because we have a supplier right here. So if it remains strong, the chances are it's going to go for another all-time high. Otherwise it might just go because this is the trend for the XLF, it might just go sideways to a little bit down. So we'll be watching the price action where it met our target as well. So it's really nice to see so many of these stocks finally meeting those targets that we had set weeks and months in advance. This is the power of pattern recognition. Now let's take a look at Morgan Stanley. This is also an interesting price action. This one finally began to take off somewhere around here, 5th of August lows. Went into the 61.6% expansion of this entire consolidation here. No further targets for the time being. Looks like it's want to be sideways to perhaps a little bit down, maybe come down to touch the 20-week moving average. That remains a possibility. Then let's take a look at the Wells Fargo. And here we go. Wells Fargo did this ABCD. At one time I thought this might be a double top right here, and it did do that, but then it did a double bottom around here, rejected lower prices, so basically could not go lower than the low of the 5th of August, which is a pretty big cycle low in the broader markets. And what we have seen is a fantastic rally right into the 1.618 expansion of this 2022 bear move, very similar to Morgan Stanley. I don't have further targets. It could actually be a pretty strong resistance level, just watching the price action now. And let's take a look at Visa. So Visa, we can see that it has also let's actually take a look at the MasterCard first. Here we go. So the MasterCard, we had the big ABCD completing around here, and we saw the market actually complete that, and for a few months it just went nowhere. It pulled back right into 38.2% retracement around $425, and then pretty strong support, and then it has moved higher. It has moved right into the 1.618 expansion of this swing, and where we also have the 1.272 times the AB leg, which is the CD leg right here. Pretty strong resistance in my opinion because of the confluence of two things. We also have this wedge formation right here. If it begins to pull back right into it, there's a chance it could actually pull back further, and if it does, it could actually come back and reach this $480 level, which is gonna be the lower end of this wedge, and also it's a really strong support level as well. Should this break, and then the chances are we could have a bigger pullback. And then if we take a look at Visa, similar kind of price action, but the MasterCard is actually much stronger stock, stronger stock, and price is higher because it's returning more to the investors, so it's kind of justified. What we see is similar to MasterCard, 1.618 expansion of this move after coming from a strong support. This is it retraced right into this, coming very close to 38.2%. Retracement. MasterCard hit the exact level, Visa had not, which meant at that time it was a little bit stronger, and this is what we have seen, that it has actually played a catch up in terms of at least the patterns formation, because it did the 1.618 expansion of this one, and coming very, very close to 1.272 times the AB leg for the CD leg here. So right around here is pretty strong resistance level, so my bias is more of a consolidation phase around this price level, so we go sideways to perhaps down after having such a fantastic run, returning fantastic, a little bit less than 80%. Some sort of a pullback, 10-15% could be expected. Now let's take a look at Berkshire Hathaway. Here we go. So the Berkshire Hathaway, this is the flagship run by Warren Buffett himself. It has also done this big ABCD right here. In my opinion, this is more of a double topping formation. We were watching for some sort of an ABCD formation like this, which obviously did not happen. I think the euphoria coming in from the elections actually took it a little bit higher, but it doesn't mean that it cannot happen. So we have a similar kind of structure, because what we are seeing is that it's right at a 20-week moving average, and if we have another week where it's closed lower, breaking this 20-week moving average, then what we could have is actually move down to about $400 for this stock right here. And if it is able to do it in a fashion like this, somewhere like this, that's gonna be really, really good, because if 382 $400 support is not, we're not able to hold that, we have this big 382 coming from this entire move higher from this point A to this point D, right around the $360, which is also going to be the structural support right here, and that could be a really fantastic opportunity, because that means that we are also, from a symmetry perspective, pretty much there. The previous decline that we saw, that was 2022 bear market, and what it means is that it'll just give us this is a really, really strong support, and it'll be really, if that support is held, and we could be starting another phase higher. and if that support gives way, we just have the 20-week moving average below that. So yeah, it'll be really a critical moment in time for the stock. But for now, it looks more of a topping pattern to me, and looks like what we could see is a further pullback happen with 400 bucks as being the next support level, and then finally 360 is the one which will be paying really close attention to should the stock get there. So this is what we are watching in the financial stocks for the US market, stocks and the ETFs. I hope you'll find this video of educational value. If you do, then please give it a thumbs up, and if you happen to like our technical analysis, the way we look at the markets, then please do subscribe to the channel, and if you do, then hit that bell icon button. That way you will know when the new videos are posted and you will not miss anything. Speak to you guys soon. Have a fantastic weekend, and good luck and good trading.